Hey y'all, happy Thursday. My name is Tiffany. I am a North Carolina realtor here in Fayetteville, North Carolina, and I am so excited for my first edition of Credit Tip Thursdays. I'm going to come through for the entire month of March, each and every Thursday, with my good friend Kevin, who looks like is joining right now, so we can talk about credit tips. Kevin, what's up, my guy? How you doing?
Hey, how you doing? How you doing?
I am good. I am good. Looks like you enjoying some of that sunshine out there.
I'm trying. I'm trying. I'm out here in these streets.
I love it. I love it. Well, I am so excited to have you join me here today for Credit Tip Thursday. Thank you so much for your time. I really, really appreciate it.
Now, listen, I appreciate the invite. Anytime that we can get some credit literacy, real estate, financial literacy out there to, educate people on the how, I'm all in. So I appreciate you creating this platform for us to do so.
Absolutely. So before we jump in, why don't you introduce yourself, let folks know who you are and why you are one of the credit experts that we need to be listening to.
Well, my name is Kevin Bullock. I am a mortgage loan officer, NMLS number 211164. I've been in the industry now almost 20 years. Next month will be my 19th year anniversary of helping hundreds
Wow.
and hundreds of families and individuals obtain home ownership. I absolutely love what I do. I run a branch here in Cary, North Carolina, so I run our North Carolina division. Originally from Jersey, so I still got the Jersey business as well. But I'm ready to rock and roll and really kind of demystify some myths people might have,
Yeah.
or some fears, right, that people might have concerning credit and how it applies to them and what they can and cannot do as it pertains to home ownership.
I love that. So one, I did not know you were still rocking the dual state. So you just know all the information because you're seeing it from multiple places. So that's super, super cool. So 19 years, that's crazy. If you had to estimate, how many people would you say over the course of almost 2 decades you've been able to help them get a home?
I don't know. It's been quite a ride. I would say several hundred.
Wow.
It's been a lot of thank you cards, a lot of invitations to the barbecues, right? I'm here for all of it. And one of the things that I love is I love wow, this is my first home for my family,
Mm-hmm.
right? I love that part. So
Yeah.
I would say it's been quite a few people.
I love that. So you know you official when you invited to the cookout. So I love that.
Listen,
Very
I
cool.
better be.
That's awesome. And so the cool thing about it, like you and I talked about before, is March is Credit Education Month. And so one of the reasons why we wanted to come together is you hit it right on the head. There's so many myths. There's a lot of fear that comes with buying property, whether it's for home ownership, whether it's investing. And so really want to just jump in a little bit and talk more about like what are some of those big myths that you see, especially when you think about people that are just deciding to get started?
Well, first it's understanding how credit works, right? So a lot of times people just don't understand how credit works. So you've either been told, use credit, get credit, use it to your advantage, or you've been told stay away from it. You don't want credit cards. You don't want that debt, right? And so what
Mm-hmm.
I've learned over my years in being in the business is that it's a tool,
Right.
right? I could take a butter knife and unscrew a screw, but that's not what it's used for. So I'm mishandling the true purpose of the butter knife.
Absolutely.
Credit is the same way. If we learn how to use credit and the power that it possesses and use it to our advantage, then there's so many things that we can do, especially in home ownership. So I tell people all the time, cash is king, except for in the mortgage world. Credit is king.
Yep.
Credit is king in the mortgage world because when you have good credit, I'll put it this way. If you have a lot of money and bad credit, you have to spend a lot of money. If you have a lot of money and good credit, you don't have to spend as much money because your credit tells people your credit worthiness. So when somebody comes to me, we look at the CIA, right? We look at the credit, we look at the income and the assets. Well, your income tells me your ability to pay.
Okay.
Your credit tells me your willingness to pay. All right. So are you willing to pay back what you borrow?
Right.
And that's what the credit does. The credit gives us a snapshot, and then there are so many different ways that you can use it to your advantage. So I would say there's no need to be afraid of it. It's all about learning how it works. And so for today, because we're going to do this every Thursday for this month, because we want to show you different ways that you can use this credit to help you get your house, whether it's your first house or your 10th house. Tiffany is the person you need to talk to get that house, and we're going to show you how. So one of the first things that I want to talk about is utilization. Okay? Because with utilization, people don't understand that's 30% of how your score is ranked, is your utilization. So if you look at how everybody has a credit score, right? And the score is going to range, I believe, from 350 to 800 is the range for your credit score. Well, how do they determine what that credit score is? It's almost like a pie chart, and they have different sections that determine the weight of the score. And so we're not going to go into every different area, but for today, we're going to talk about utilization, and utilization accounts for 30%. So that's a third of your score. It's simply based on how much credit do you have.
Okay.
All right. So what I do is I say, let's simplify this, right? We don't need to make this real complicated. When you have revolving debt, so that's credit cards, anything that you can use and then pay down and then reuse is revolving. You want to keep your utilization at 30% or lower.
Okay.
The easiest way to remember this is the divide by 3 rule.
Okay. All right. Teach us now. Tell us about this divide by 3 rule.
The divide by 3 rule, whatever your limit is, divided by 3. That's going to basically put you at that 30% mark.
Ooh.
So if you have a credit limit of $1,500 and you divide that by 3, well, then that means you should be maintaining a balance of $500.
Okay. So no maxed out credit cards. We shouldn't be maxing out credit cards is what you're telling me.
No, we shouldn't be maxing them out. But now here's the thing. Let's say you do max it out, right?
Okay.
You bought some furniture, you went on vacation, whatever the situation is, right? You max it out, and on your $1,500 limit, you use $1,300.
Okay.
I'm cool with that. That first payment, you're going to make a payment and bring that balance down to $500.
Got it. Okay, so it's only about the actual statement, how much you have left, not necessarily that you can't use it at all.
Correct. So it's not that you can't use it, but here's the thing: you got to be disciplined, right? So we're talking to that individual that's disciplined, that says, you know what, 2023 is my year. This is the year that I want to purchase a house, right? I'm disciplined, so I know if I'm going to use my credit card, birthday comes up, anniversary, whatever, and you end up going over that 30%, well, just pay it down to the 30%, and now on the next month, you can make your minimum payment. You can make that $15 payment, that $45 payment, because your balance now is at that 30% mark.
Right.
But if your utilization at $1,300, you're at like 95%. That's going to lower, that's going to keep your scores low, and your utilization is going to be considered very risky.
Okay. Okay, so let me ask you this then, because I hear what you're saying. So if I have a credit card, I want to make sure that I'm not maxing out my credit cards all the time, keeping a high balance month over month. Is that what I'm hearing you say?
Correct.
Okay. Now, what if I have multiple credit cards? How does this apply if instead of one, let's say I have 3 credit cards? Is it the same process?
Same process. You're going to use that divide by 3 rule for every card.
Okay.
So you might have one card that's only $300. So what's the balance on that? It's $100. You might have a card that's $1,000. So the balance on that's going to be $333. And you might have a $5,000 card, right? So it doesn't matter how many cards you have. If you have 5 or if you have 1, you're going to use the same rule and apply the same rule to each account. You're going to keep your utilization low. You will be surprised how that one thing, if you have somebody and let's say their scores aren't where they want to be, and they just brought their account balances down to that 30% mark or less, you'll be surprised how quickly the score can go up.
Really?
Now, listen, this is all things being equal, right? This is not, if you're missing payments and things like that, then it's going to take a little bit longer. But all things being equal, if you're just suffering from high utilization and you bring those account balances down, you can see significant score increases. Significant.
Wow. Okay. So this is on each individual. So not your total amount of credit, but each individual card, the balance needs to be under 30%, and then we can see an increase in our credit score.
Absolutely. Almost immediate.
Wow.
Almost immediately, you will see the results of bringing that utilization down.
Okay. Now, you mentioned earlier that, and I love the CIA acronym that you said. And so you mentioned the I was the income, and that is the ability to pay. But then the C, what I heard it, I know you said it was credit, but I heard of it more as like your character, your willingness to actually pay back what you owe. So that's related to our utilization. Why is that so critical, though, when I'm thinking about a house?
Well, the willingness lets us know that you're willing to pay other debts. So I know you're going to pay me. So let's just use a practical sense of lending here, right? Because people don't really think about it this way. When somebody comes and they want to purchase a house and they're looking for financing, they're asking the bank. They're saying, listen, I know you don't know me, Tiffany. I know you don't know me, Kevin, but I want to borrow $450,000. There's some. Listen, if somebody came to you and said, "Hey, Tiff, I need to borrow $4,000, not 400. I need to borrow 4,000." I'm pretty sure you're going to have some staple questions.
A lot of them.
What is your ability and willingness to pay me back?
Absolutely.
That's all this is. When we look at the credit report, because we don't know Mr. Smith, Mrs. Jones, we don't know those individuals. And we want to lend. We want to lend the money. As the bank, this is what the business that we're in. We want to lend the money. We just want to know that you're going to have the ability and the willingness to pay it back. So it's important when you're purchasing a home, because I'm going to look at the credit report and say, okay, I see Tiffany, she has her car payment, that's on time. She has her student loans, that's on time. She has her credit cards, that's on time. She's a good credit risk.
Okay.
It makes it more palatable for me to say, okay, I'll lend you $450,000 now.
And that's interesting, because I definitely grew up in one of those households where credit was bad. Like, I did not get a credit card until I was getting ready to graduate college. And it was one of those, like, if you can't pay for it in cash, you can't afford it. But now that I'm in real estate now and seeing, like, well, there's a lot of things that I don't want to pay for in cash. And we all hear a lot about, like, OPM, other people's money. And so this is definitely, it makes sense when you think about it like that. Like, I wouldn't let any regular person ask me to borrow $2,000. So why would I want to give somebody $200,000 for a house? And so we're putting ourselves in the bank's shoes. We understand more about why this is so important.
Absolutely. And like I said, it's all about risk-based lending, right? And so, and I understand many times, sometimes you get yourself in a tough situation, right?
Sure.
Life happens to all of us, right? Nobody's exempt from life happening. And so there might have been a time where maybe your income isn't what it is now, and you got into some trouble and you had to max out all your credit cards, and you maybe you fell behind on a car payment because you was laid off, or maybe there was a medical bill that came up unexpected, right? Life happens. We're not opposed to life happening. What we're opposed to is putting our head in the sand and acting like it didn't happen, right? Because many times there are solutions, and we just have to really make up in our mind that we're not going to allow credit to stop us from purchasing a home. So,
absolutely,
contrary to what you believe, when a creditor is calling you, they're not calling you to bug you. They're calling you to work something out. Listen, answer the phone. They might say, listen, I see you're having a little trouble. Maybe we could do a deferment. Maybe we could put the payment on the back end, let you catch up, get a month off, and start all over next month. How does that sound? But what we do is, by ignoring what we're going through, we forfeit our privileges, and we forfeit the benefits. Many times they'll give you a concession. They'll say, you know what? Okay, we'll let this month slide, just catch up next month. But what we do is we won't answer the phone for 2 or 3 months. Right? We let those notices come in and we don't open the mail. And now when you do go to call, they're like, listen, we tried to call you back in October of 2022. You know? So don't be afraid of it. This conversation Tiff and I are having is so that you can tackle credit head on. And then if you don't understand it, if you don't know, you have professionals like Tiffany, like myself, that can walk you through the process.
Absolutely. And it's so good that you said that, because that was going to be, and it's leading to my next question. But one thing I realized is I had never seen or heard anyone to call to kind of negotiate a late payment. That was unheard of to me in my head. Either you got it or you don't. And so the first time I had heard someone say that, I said, oh, wow, I didn't even know that was a thing. And so it's great. That's a great point that you bring up for people that many aren't aware of, that you can work with people that you owe money to. It's like, I mean, just like in regular life, we all have either seen or know someone where they owe you some money, all of a sudden they ducking and dodging you. We do the same thing with businesses, and businesses are in the business to make money. And oftentimes recouping some of their money is better than none of the money. And so they will work out either payment arrangements, or even just, like you said, like you could pay it the next month, but we'll never know if we're not willing to have that conversation and really address what was happening head on.
Absolutely. You're spot on with that.
I love that. So my next question to you then is there a time limit when we're thinking about, okay, I want to purchase a house, but I need to make sure that I have this 30% utilization? Do we need to have it for a certain amount of time? Is it, just to make sure that our score goes up? Talk to me a little bit about that.
So no, there's no specific time limit, because what the utilization is going to do, as far as the lender's concerned, is it's not going to necessarily affect your DTI, which is debt to income ratio, because you're still going to have what your monthly payment is. But what it does is the lower utilization is going to increase the credit score. And so now with the increased score, you now have more options, right? And that's the name of the game. If you're going to purchase anything, you want to have options. You don't want to get into a position where you're eligible, but you have to do it this way, and that's it. When you have the better credit scores, and when I say better credit scores, I'm talking really 680 and above. Now, we have products, most lenders have products that will go down to 580, right? They go down low. But we're not working with a minimum mindset. That's not what we do. We don't have a minimum mindset. We go for the maximum. So what's the highest credit score that I can get? So with that being said, if you are maxed out now, or your utilization's high, and you know that you want to purchase a home, just start working on that now. And we actually have tools where if somebody came to me today, I pulled the credit, I looked, and their utilization is over 30%. They could pay it down. We could do what's called a rapid rescore. What a rapid rescore is, we take the proof of the payment and the updated statement. So we show that they made their payment, and we show the updated statement reflecting the new balance. We send it to the credit company, and they're able to rescore in usually 7 to 10 business days. So it's much quicker than doing it and then just waiting for that bill to cycle the normal
Right.
30 days. So if you have time, you could just do it and just wait the 30 days, or we could do it while we're starting the process and do what's called a rapid rescore, and then we can see your score reflected, like I said, within 7 to 10 business days.
Now that's very, very cool. I've never heard of that because I am definitely one of those people, especially now that I have been in the financial literacy world and paying a lot closer attention to my credit score and my finances and overall net worth. I have caught myself sometimes waiting until that next update happens on my credit score so I can see the improvement on what's happening. So that's really good to know that there are ways in which you can make the payments and then see the results of that. So that way it's not really impending. It's not really stopping what you're trying to do if you see a house, especially in this housing market.
Right. Right. So I tell people all the time, if we need to make a move, you have a lease that you don't want to renew, right?
Right.
In May, and we're in March, and you're trying, let's do what we need to do and make that payment. I'll do the rapid rescore. We'll have your updated scores because I have the tools that'll say if you bring this down, we have simulators, so we'll know once you bring this down, then your anticipated score increases plus 27, plus 15. So we'll know. It's not like we're just throwing the dart blindly. Like,
right.
We're very strategic and intentional when we do these things.
I love that. That's why it's so important to work with a professional, so then you can get the assist that you need and actually make a strategic game decision on what you need to do in order to make sure that you're able to achieve your goals. So that's super, super helpful.
Absolutely.
Very cool. So it sounds like the people got homework to do this week before we come back next Thursday. And so what sounds to me is that homework is we need to, one, look to see what is our utilization rate currently, and to figure out if that utilization rate is over 30%, what do we need to do on each of our credit cards to get it to 30%? So how much is that payment that you need to be working to make to get your credit cards down to 30%? Does that sound, did I get it right, Kevin? Is this my homework that I need to go work on?
That's the homework, and we need to ask anybody that watches this live. We need to ask them, what's the rule? What's the very simple rule that you need to apply in order to get your utilization at that 30%? And the answer is divide by 3. It's the divide by 3 rule. Whatever your limit is, divided by 3. That's going to put you in that 30% range, and that will keep your scores at its optimal levels.
So basically what you're telling me is now my credit limit is no longer my credit limit. My credit limit is the limit divided by 3. That is what I need to now know is I can't spend no more than that unless I really, really need to, and I'm going to pay it back as soon as I get paid again.
That's right. So if you have a limit, you're like, well, my limit is too small. Well, then keep doing what you're doing to build credit and work till you can have a higher limit so you can have a higher balance. But you do not want to be maxing out your credit card. And so here's just a simple thing before we leave. I use my credit cards for things that I know are not going to take me over the limit.
Okay.
So I use my credit cards to pay my Netflix, my Disney Plus, right? I use my cards to pay for the gas. Something that I know is not going to take me to that $2,000, $5,000, $10,000 mark. It's not going to take me there.
Right.
So I'm always going to have a smaller balance because I use those cards for smaller transactions. Now, it's good to have because emergencies happen. You have to put your car in the shop. You need to get your car out the shop. Whatever the situation is, right? Like I said, life happens, and there's nothing wrong with now having that flexibility, and that's the other thing. If you max out your cards and now an emergency does happen,
right,
now you don't have anything to fall back on. But if your utilization is low and you find yourself in an emergency, and I mean a real emergency, not
not these shoes were on sale and I really, really need them, Kevin. Is that what you telling me?
No. I need a real emergency, right? We need to define that. That's subjective, right? but you'll have something to fall back on.
Okay, I got it. But that's a great point because I also think, especially as we were talking at the beginning of this about the fears and mindset around credit. And so for many of us, if we were taught not to use credit at all, we're also doing ourselves a disservice because they're not seeing that regular credit, and credit companies will shut down your credit card. So then you won't even have credit to be able to have a utilization, which can also hurt us if we don't have any credit as well. And so making sure that we use our credit card, but on stuff that we already have budgeted for, so we can have some sort of activity for it to stay open, but nothing that's going to take us crazy. I guess I won't be taking no trips to Dubai anytime soon or anything, but I got it.
Right. No, we're gonna save up for those trips.
We're going to save up for those trips. I got a multi-family that's coming this year. I can't wait. So I'm trying to be disciplined, but it's okay. It's on the vision board. So it's all good.
Absolutely.
Well, Kevin, this was amazing. Any last parting words that we want to leave with the people for this first edition of Credit Tip Thursday?
My thing I will leave is do not be afraid of credit. If you have a question about it, call Tiffany. Call myself, and we can walk you through the process. Even if you've messed up, I don't care how low your credit is. The beautiful thing is, as long as we have time, we can fix it. I always say credit is a mindset first. Once you make up in your mind that, you know what, I'm not going to be afraid of credit. I know that I might have messed up in the past. I didn't fully understand how it works, but I just watched this live, and I do know that I want to purchase a house. Even if it's not this year, next year, I've been telling everybody, it seemed like we was never going to get out of 2020. That seemed like the longest year ever. And guess what? We are 3 years removed. It's 2023. Tomorrow is coming whether you fix it or not. So why not try to fix it, right? And if it takes some time, it takes some time, but now you're in a better position. And again, you have more options. And that's what we're trying to do. Providing this literacy, this education piece, we want you to have as many options as possible because home ownership is a great, fantastic, and very doable way to attain wealth for yourself and your family.
Absolutely. I couldn't have said it better. I'm all about buying your way to wealth. And so it sounds like, this is doable. We just got to, the steps that we take today are what is going to prepare us for a better tomorrow. And so, Kevin, I so appreciate your insight. Tell the people how they can get in touch with you if they have questions or want to follow up.
Absolutely. You can call me. My number is 732-947-1090, right? Or 919-647-7878. I can be reached here on Facebook, Kevin Bullock. On Instagram, I'm _Kev's Keys, _. And the keys is for home ownership. I'm giving keys to wealth and home ownership, Kev's Keys.
That's it. All the keys to home ownership. Kevin, thank you so much. Y'all will be right back here next Thursday. Be on the lookout for Credit Tip Thursdays. We want you to be homeowners. We want you on the path to wealth in 2023. Let's make it happen, y'all. Have a great one.
Peace.